Is Cardano's ADA a security? In this video, we're going to explore just that. As I get into the video, if you find it useful and informative, smash the like button. If you're new, subscribe. And if you haven't yet joined us in Discord, check it out, linked in the description below. It's completely free, and it's the first place we go to notify you of everything that's going on in the crypto space. Let's jump right into this video though, right? So is Cardano ADA a security? Well, according to a recent filing by the SEC, they allege that Binance sold unregistered securities and listed a few. Cardano ADA being amongst many being listed and cited as securities. Now, this isn't a new argument that's been around actually for quite some time. We saw back in 2022, 𝗕𝗘𝗪𝗔𝗥𝗘, for example, saying and claiming that all proof-of-stake protocols are securities, and only Bitcoin is the one and only chosen digital asset that's a commodity. And if it's not a commodity, then it's just a liability. That was 𝗕𝗘𝗪𝗔𝗥𝗘 back in 2022. Now, obviously, we can dive down deeper than just a Bitcoin maxi or an Ethereum maxi or whatever. We can obviously dive down into the world of the SEC and their claims against Binance and Coinbase, and to name a few. Now, we'll kind of just point out one interesting thing, specifically when we talk about Cardano's ADA, is that the SEC also filed a lawsuit against Coinbase for unregistered securities, where a few similar coins are noted, but Cardano ADA was not. So what is the difference between Coinbase selling Cardano ADA and Binance selling Cardano ADA? I think there's something there that we need to be maybe deeply investigated, further than what I've already done for this video, but it's an interesting thing just to note. So there's a list of coins. I think there's like 62 different cryptocurrencies that the SEC currently believe are securities. Some of these include things like Solana, Tron, Algorand, XRP, Dash, Axie Infinity, all the way through to others like Polygon's Matic, BNB, Luna, Cardano, and the craziest one yet would be Luna Classic, which obviously was a fork of Luna, Terra Luna. And so there's a lot of things to kind of really break down there. Is the kind of how are the SEC really ascertaining whether something is a security or not, when the very Howey tests would be something quite difficult to kind of note. I will note, just before we jump into the idea of Howey test and Cardano's ADA, and to why I believe that the Cardano ADA asset is not a security. Not only do the rest of the world acknowledge that Cardano is not, or ADA is not a security, it just seems to be the US has a problem with digital assets, mainly because they're losing power as the USD loses its grip as a global reserve currency. With that being said, we can see here that the SEC, that is, have filed 13 charges in a lawsuit against Binance and Binance companies. And specifically with the org chart, it's a little bit fuzzy, so I apologize for that. Specifically, it's Binance US and BAM Trading Services, BAM Management. It's basically this little branch right here. And you can see that there's distance between CZ, Binance.com and Binance, so Binance Holding and Binance, which is over this side. You can see the branch here. So you can see CZ up there. And you can see various different holdings, management company holdings and so forth. And then you come down into BAM Management US Holdings Inc. and then BAM Trading Services Inc. and then BAM Binance US, right? So we know that this is the area that the US are kind of trying to go after, and they're trying to basically freeze BAM assets and push them into Binance and Binance US for that matter, and then get them frozen. But essentially that doesn't affect Binance.com, not unless of course agreements can be made between different jurisdictions and different countries, and we can think about how the US are friendly with some jurisdictions and not so friendly with others, and figure out whether or not that kind of deal is going to be kind of met. But that's probably a conversation for another day. Now, with the charges of 13 charges against Binance, we're only going to focus in on Cardano ADA as the security allegation, right? And so let's jump over to the Howey test. And the Howey test is simply made up of a four-pronged approach, right? And a lot of these are really quite vague and open to interpretation. And I think the SEC really do try to push these these to the limit, right? And with what can be expected. Now, the other thing that's going to bear in mind, I'm going to kind of break you through, or walk you through where I think Cardano sits on these, right? But let's go with the first one, an investment of money. Well, an investor is investing in Cardano ADA for many different reasons, right? There's a lot of utility behind it. So, for example, I might buy ADA in order to play the 𝗕𝗘𝗪𝗧𝗕 game and to buy an NFT that allows me to play that game. Is that then going to mean that I've bought a contract? And that I've invested money in ADA in a speculative investment environment? Well, no, that isn't the case at all. And I did actually buy a lot of my ADA on Binance in the early days. So the question becomes, did Binance sell me a security? I don't believe they did, because that's not why I was buying ADA necessarily, right? And does the SEC know why we've been buying ADA? I don't think they do. They definitely haven't asked me my opinion. But anyway, moving on. An investment of money. Yes, there's been an investment of money to a degree, depending on your purpose of ADA. Is it in a common enterprise? And this is really where shit starts to fall apart. And well, no, it isn't. So if we think about and why there's also precedent here, we have seen that courts have said that sales on exchanges, the secondary market, cannot constitute sales of securities because it's not in a common enterprise. The money is not flowing to a common enterprise. You're not buying ADA directly from 𝗖𝗢𝗠𝗠𝗘𝗥𝗦, for example. Instead, you're buying it from other sellers and other people who've already purchased ADA in the past. So does ADA fit to this idea that we're basically investing money in a common enterprise? And well, simply it does not. That hasn't been the case for quite some time, and we'll jump into a little bit more of that in a little while. With the expectation of profit. Okay, so have I invested money in a common enterprise with the expectation of profit? Well, no, I haven't invested in a common enterprise. But is there an expectation of profit? Well, it depends on the use case of why you purchased ADA. So for the most part, there's going to be a lot of speculative investors out there that are expecting to return a profit on ADA. And then, of course, there are people who are saying, well, no, I've just bought ADA and I used it to buy an NFT, because there are and is a thriving NFT marketplace on the Cardano ecosystem. There's also a whole host of other reasons that you might buy ADA, everything from DeFi through to many different reasons on the protocol, lots of dApps being built and so forth. So lots of reasons to own and hold ADA outside of just expecting a profit. But let's hypothetically say I'm investing in ADA and I invested money with the sole purpose of making a profit. We already know that it's not in a common enterprise, so again, we're not really following the 4 rules of Howey here. But it is the profit to be derived from the efforts of others, and this one is a little bit vague when it comes to digital assets, and it becomes a little bit of a problem. And specifically because, yes, there's going to be the efforts of others, but you don't necessarily know who the others are. Okay, in the case of Cardano's ADA, I bought Cardano's ADA way back in 2020, and it's hard to think of all the dApps that have been built now and things that are kind of looking to launch when they were not in existence or hadn't even been formulated into an idea when I purchased ADA. So is it on the back of efforts of others? I'm going to have to kind of say yes and no. This is kind of a mixed bag, because the idea here is that you see opportunity, you see the potential in the future of a particular ecosystem that you think that may appeal to a wider audience, and as such there will be people that build on that ecosystem. So although those protocols or those dApps that were not yet in existence on the protocol when I invested, I kind of say that yes, I probably was and am invested in Cardano ADA with the expectation that during a bullish market, the market will go up, the value of ADA will go up, and I'll be able to turn a profit. But turning a profit on the backs of others, on the efforts of others, possibly. It's a loose one. But what I really want to focus in on is a couple of interesting things. If we are to be a speculative investor on Cardano's ADA and we invest money in ADA, we do expect to turn a profit. You cannot use the word investment of money and not expect to return a profit. Otherwise, you're investing money and expecting a loss. Those two things are a bit counter in my opinion. But yes, I invested money and I'm expecting to return a profit on that. But it was never into a common enterprise, and it doesn't really fit the idea that it's has been or will be derived from the effort of others when I do not know who the others are. So there's a few things here that are a little bit, fuzzy to say the least, but let's focus in a little bit here. Cardano's ADA in the US had no ICO. The ICO, or the initial coin offering for Cardano's ADA, happened over in Japan. It was actually a four-staged approach, where approximately 25.9 billion ADA tokens were allocated during the sale. The sale took place between September 2015 and January 2017, approximately, give or take a few dates in there. But for the most part, the token price, and this is going to kill so many people, it kills me just reading it, 0.0024 cent per token, which is absolutely insanely low, and you've seen people with insane returns on that investment. In total, I believe it was about $62.2 million that were raised during the four-stage approach ICO in Japan. Now, this was a fair launch, as in people had plenty of opportunity over the four stages to invest in ADA if they wanted to. Now, this ICO happened outside of the jurisdiction of the US. Okay, so the question then becomes, do the US really have any ground to say that the initial coin offering had anything to do with US customers, considering the US customers themselves can self-certify that they're accredited investors and can invest and so forth. And if they choose to go to a different jurisdiction to do so, that's on the individual investor, hence the self-certification. The US side of things is to regulate US-based companies and to protect US retail investors. Not that the SEC do a very good job at that. They cause billions of dollars worth of damage to retail investors time and time again, while simultaneously saying that it's for your own protection. We've seen this and heard this time and time before in history and throughout history. Essentially, there is corruption within the US government and the SEC specifically, and I do think the the SEC versus Ripple lawsuit with the Hinman emails is going to kind of show a fair amount of what has been going on behind the closed doors. In terms of ADA though, looking at everything that's been going on here with an initial 25.9 billion allocation going out to many individuals at $62.2 million raised in a jurisdiction outside of the US, it's hard to think that the 13 allegations brought to Binance here with listing ADA as one is not a bit of a stretch. I think that it is. I think it's an incredibly big stretch. I think the US Exchange Commission are losing grips on reality, and the puppet master, whoever he or she may be, or entity that is, and 𝗕𝗓𝗪𝗔𝗥𝗘 being the puppet here, really should do a better job at doing some due diligence. There's definitely something bubbling in the background. I'm not going to be saying that Binance seem to be completely guilt-free of all of these allegations, but these allegations are bringing some really illogical and foolish arguments to the table, as we had seen with Ripple as well, considering XRP secondary sales as securities as well. I think essentially we've seen in the past courts rule that secondary market cannot be classed as a security simply because, again, it's not in a common enterprise. There is no investment flowing to one singular entity. And it's important that we understand that in order for the Howey test to really flow and to really work, we have to consider maybe an investment of money in a common enterprise with the expectation of profit that is derived from the efforts of others. And essentially, those are four key things that have to be applied. And for Cardano's ADA, one, there is no common entity within the US jurisdiction and current within 2023 that is receiving any funding or investment of money, and there is no expectation of profit to be derived from the single entity because there isn't one. I'm not buying my ADA from Binance expecting the efforts of Binance to grow a profit in Cardano ADA. It's not what is going on. We can also argue that staking is a different mechanism. We may look at Cardano's ADA as an asset that we can delegate and stake for a return, and in which case, does that make it a security or is it completely something different? I think there's a lot of things to kind of consider here, but my stance is very much aligned to how the UK government look at this, that it is not a security. If anything, it is a utility token. Okay, we see XRP here in the UK as an exchange token, as in it is designed to exchange between two different currencies, and Cardano ADA as a utility token. We do not see these things as simple how we test rules, and we do not see them as simple securities, commodities, and that kind of thing. I think ultimately the US are getting further and further away from this innovation. They are trying to put out the flame that is the blockchain sector, and they are not going to succeed. One of the things that is critically important that we must remember here is that the SEC, they are trying to protect the wealth of the fiat Ponzi scheme. Whereas the blockchain technology, cryptocurrency, is for the people, and the people will win. I will leave this video right there. If you found it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then do subscribe. And if you haven't already joined us in Discord, check it out, linked in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All other videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.